Hey students from around the world, this is Jerremy Alexander Newsome with Real Life Trading. I hope you had a good weekend. It's Monday, magnificent Monday. and today's market was kind of cool. We'll definitely be checking it out. Before we do, I'll just look at a few requests from students who posted on the Real Life Trading group page. First of all, my good friend Yov wanted to look at IWM. Yes, IWM. So we talked about this one today in the trading floor, and he did mention, and I know me and you've already talked about, Yoav, that you're going to be in there 2015. So yes, I talked about the IWM, and the Iron Condor for the IWM is a little bit in trouble after today's small sell-off in the market. So if I hop over here to IWM, to the ETF for the Russell 2000, let me go to the daily chart, and you can kind of see what's going on. My thoughts are the top of the bear call spread is just fine. The bear call spread, Iron Condor portion is going to be totally okay. We absolutely had a nice little support zone, and today we closed below there. Now, this is a bull put spread that does not expire until next Friday. So during the trading floor, we were looking at the hourly portion of the IWM, and we kind of saw this little pennant pattern begin to form, and it's not at 113, right? So we are above 113. We're not in the money yet on the spread. We're very close. But I went ahead and mentioned, and kind of the same thing follows suit. If we make a lower low and a lower high at all tomorrow, I would actually go ahead and unravel. And what that means is simply buying to close the 113 put that we sold and holding on to the 112. And as the market goes lower, our expectations are to be making a small profit, or at least break even on that particular 112 put. So my overall thought process is on the daily chart. We have a pretty decent little target around 111 and some change. That's where I would sell to close the 112 put that we continually held on to during that time. Brian Bodie is kind of doing the same thing for a Google trade that he's in. He's in a bull put spread, and on the bull put spread, kind of very similar to the analysis that I did down here, he did a 515, 510 bull put spread, and he already had a plan to unravel it once we started breaking below 520. Well, Friday's candle was pretty bearish on Google. The black candle that opened and closed below the prior day white candle's close, really trapping anyone who went bullish, and today we closed below support. So again, he bought to close his 515, he's holding on to the 510, and since today is kind of a bearish candle, you know, he doesn't need a big move, and so a little bit of a move lower tomorrow, and he'll probably exit the put side for a small profit or a break even, you know, just so he protects and mitigates his risk on the bull put spread, because that's really the most important thing to do when we're trading these. So on SPY, another really interestingly bearish candle, ladies and gentlemen. Volume is picking up. Again, I'm not saying this is the overall top of the market. This is actually very healthy retracement for me. I like what we're receiving right now on the markets. And I don't know exactly where we will bounce. My goal and my thought process is that we could and should bounce, but we have some solid support where we are. And where we are is also the 100 simple. So bouncing off the 100 simple doesn't look like it's going to happen with two pretty big black candles. It could, though. I mean, we could get a big, nice candle tomorrow. We could get a hammer. We could get a morning star reversal. And that being the case, if we do trade down to here, we do get some reversal signals off the 100, I would be a buyer. I would be in a process to begin buying. But I really like the volume and how it's picking up right here in this location. And my overall thought process is we continue a little bit lower, perhaps to the 200, maybe as far as 192. If we get back to that far, I'll definitely be considering buying some positions. Kind of very similar with the Qs and the DIA. I mean, it's really the same principle for the market in general. You know, if we do pull back and we bounce, I would be a buyer. So let's hop back over here and let's look at a few. Mark, who's a good friend, wants to look at X bearish. And Mark, if you got a chance to trade X bearish, you're in good shape. Good friend of mine and a real life trader, Orkin. He's in the trading floor pretty much every single day, and he's up already a few R's on United States Steel. He got in back here on the retest, and it was a very good entry. I mean, he got in bearish, you know, somewhere around, I don't even know, 30.70, and the stop was like 32. So he had a really good entry on X, and we are at a soft target And all I mean by that is it's definitely a place that we could stop and we could pause for sure. But my next target on X, since the trigger intraday was 29.16, my next target is 26.26 mark. And the fact that this is a beautiful little flag pattern and right now kind of almost looks like a stair step. I'm not afraid if it does continue to trade sideways just a little bit, but it definitely could cause for a rest and a retest. You know, we haven't really hit the 20 exponential at all in about a month at this moment. So nice little flag, failure of the 10 exponential right there. If we trade all the way down to here, trade back up and fail, we'll kind of see. But earnings are not until the end of January on United States Steel. So that'd be fascinating to see how that plays out. Let's see if you guys want to look at anything else. I'll open up the post here. I looked at ONVO today, Bob, on the trading floor. So let's go look at ONVO again. Anovo. Oregano Holdings is what I call it. It's not Oregano Holdings, obviously, but I like ONVO. The interesting retest gapped up. The one thing that concerned me a little bit is we really were at a strong resistance point. I mean, here's your support, 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 resistance. It did make it to a strong support resistance location overall. So my expectation on Oreganovo? Oh man, I'm butchering it. I'm just gonna keep calling it oregano. I do know what it does, and I still am considering some $5 put sales for January on this particular stock. Now that we had a down day today, or a down candle, I'm gonna see if we pull back any farther. But for my students who want to, consider owning shares, $5 put sale for January is paying some pretty decent premium. I think about 10 cents on a $5 stock is pretty good. So I'll be keeping a closer eye on that one as well, especially if we pull back just a smidge more. But this downward trend line is really, really fascinating on this particular stock. You guys can see that we really are making some nice lower highs overall, some kind of big triangle. So maybe, just maybe, if we start getting some closes above these wicks, about 748, I could consider myself being more bullish than bearish, without a doubt. And PetSmart, Tantianos was a really good gap today, without question. It was really quite pretty. But there's talk of buyout, so it did not move very much. And otherwise, it was a perfect gap. But there was talk about buyout. So it really just throughout the rest of the day just kind of trades sideways, which is oftentimes what does happen in the case of buyout talks. The gaps usually don't end up being that sensationally delicious. So it'll be interesting to see what happens. And last but not least, of course, Apple, right? Apple, every day of the real life stock review, we're going to check it out. Here's the chart on Apple. And my overall thought process is, looks like we're going to continue a little bit lower. It's fascinating that my entries didn't save on Apple still. I've been trying to save my chart on Apple for the longest time, but I don't think TradingView likes saving. Anyway, I'm actually bearish. We set up a bearish intraday trigger on Apple today on the trading floor, and the bearish entry was approximately here, 108.50, and the stop was 110, and that is for a bearish swing trade, a short one, short-term one. And this kind of looks like a falling 3 pattern on the hourly chart on Apple. And actually, the ultimate target on Apple for me is about 104. I don't know if we'll make it all the way down to that level, but that's where the 100 simple moving average is. And that's where this old, kind of the all-time high, old resistance, new support. And if it makes it down to this location, we definitely could bounce and kind of move around. We could do something. But here's your long-term simple moving averages, kind of right in that territory. That'll be a great buying location for me on Apple, since it, had a nice bullish move, has had a nice retracement, and if we start getting a bounce around here, I would be indeed more bullish than bearish. I think that's kind of our next target, and it does offer really good risk-reward ratios if you got in earlier today. So again, ladies and gentlemen, the trading floor is really a great community of traders. I love the people who are in there. We really mesh very well together. Ideas, strategies, questions, comments, concerns, thoughts, opinions. It's absolutely fascinating and incredible that I get the opportunity to be with real life traders day in and day out and trade the markets. I love it. Ladies and gentlemen, have a great Monday. If you need anything at any time, you know where to find me. Email me, call me, message me, text me, Facebook me, LinkedIn me, Twitter me, whatever you want to do. Reach out. I'm happy and here to help always. Students from around the world, have a great Monday. I'll see you guys Wednesday. And until then, remember, love life, live life, and trade it. I'll see you guys later.